Hey guys, what's going on? It's Matt here with Sean over at Keller Banker, going through. I hope you guys had a great holiday. We want to talk a little bit this week about an article that came out from the National Association of Realtors. You guys know, if you don't, Sean's heavy in that whole association here locally and on the national level. Gives us a little more insight than what a lot of these articles go through. So Sean, what we had this week going through, I had some great talking points, good and bad, but let's jump into it real quick.
I think the big news that we learned out of that article was the amount of how much more it's costing for a homeowner to own a home this year, other than mortgage payments. But talking about interest, insurance, utilities, all the home ownership costs that go involved in owning a home is up significantly.
Yeah.
But we could also talk about the reasons why it's still the best investment you could
Yeah.
make.
You sent it over to me, I think, on Monday.
Right.
And I thought for this week's cast, it was fantastic just because all the points that I've had a lot of buyers saying the same thing. They're going through. What struck me on the article, one of it went from about $18,000 a year just overall to about $24,000 a year. So it's about $500 extra a month a homeowner's gonna have to spend on maintenance of things or taxes and insurance and things like that, which a lot of people are strapped. But on the same token, there's so many other sides to it as well. If that's going to deter you from buying a house, which, as being a real estate agent, firsthand, there are some drivers that are really moving that.
Sure.
More than anything.
Yeah, I think one of the biggest sectors of that is probably utilities. The cost of gas, the cost of electric, it just keeps rising.
Yeah.
So it's putting a burden on people that are owning that home. However, like I said, if you rent, then you're literally 100% of what you.
Yep.
That's 100% interest.
Yep. Doesn't matter what the rate is.
Right.
You're paying 100% interest, and you have no ownership in that.
Right.
Yeah. That's where it was. It's as a deterrent of people not getting into homes for rising costs like that. $500 a month. It is a lot. Absolutely. But appreciation at 4 or 5% being modest in our area, you're going to miss out on that. And it's like compounding interest. You're going to miss out year after year after year. But to your point, I saw too, PICO, PPL this year, especially all those insurances are going, or I'm sorry, the cost of the electricities are going up. So I thought too, kind of going back in the day, it's budgeting. I think a lot of people got away from just budgeting for something. A person with a really, in the best way I can say it, someone that has a dependency on something, they're going to find a way to get their fix of whatever they need. To hell or high water, they're going to get there.
Right.
Every day.
Right.
So if that home ownership is something you gotta button down.
I mean, we used to tell people all the time, like an extra $20 a month in a mortgage payment is maybe one or a couple less trips to Starbucks, in those $6 lattes that you're buying.
You and I both know we like our Starbucks.
Yeah,
so,
cut back on that 3 times a week, and you could afford the house.
Absolutely, it's amazing. All the conveniences that we're living with now, and that's where what struck me too is having discussions with borrowers and buyers, and then qualifying them, and then you getting them into the houses is having those discussions. How many times have you seen buyers shy away from a house because the payment, it might be $100 to the high side of where they are, but it fits all the bills. It doesn't make sense sometimes.
It happens all the time, and then sometimes they'll wind up settling for less. And then, talking about the cost to improve things and fix things and maintenance around the house.
Yes.
Like that's up 61%.
I was going to say, I saw that, I thought it was like more north of 50 or 60.
Yeah,
wow.
So it's 61% increase in what it takes to maintain your property. Like spend that extra $150 a month and get that home that doesn't need as much maintenance.
Yes, and it's a difference of finding a good real estate agent that's going to guide them to where they need to go versus someone that doesn't. There was another good analogy I had that I saw from another gentleman that I followed down in Florida, and their loan officer said, like, if you have a 500-mile trip from here to wherever you're going to, you're going to Waze and MapQuest and know where you're going to stop for gas and do all those things to get there. It's a big trip. Same thing when you buy a house. It's a big experience. You don't have some local lender and a good real estate agent.
The only difference is it takes you 30 years to get there.
That's correct. That is correct. But if you don't have someone telling you to go left here, go right there, stay straight, stop for gas here, it's going to be a rough go at it.
Right.
That's where I think that article this week, more than anything, really, especially going into the fall, especially I know getting Christmas presents for the kids, you had your family in town. It's just things are just costing more. It's going to be a lot of sticky inflation. Things are going to just cost more. That's where I think education and budgeting. So that's where the article I read through it I'm glad I read it in the fact because a lot of people in the media like to read that as a negative, but you got to always look at the positive side of things too.
It's always going to be cheaper to own a home than it is rent, and that's the bottom line. And I mean nobody can tell you different.
Yeah.
And I think that's always the push obviously from the National Association of Realtors is homeownership, right?
Yeah.
We want as many people on the planet to be homeowners. And that article sheds some light on what the burden is of owning a home, but at the end of the day, it's the only way to save for retirement.
Yes,
is owning a home, paying equity into into yourselves, and saving money for retirement.
Absolutely, and that resonates with people that might read that article that have been like yourself. You have multiple properties, been in homes a long time. Myself. You read that and you're like, yeah, but I'm sitting on X amount over all this time. It's but you don't, when you first get into it, it's kind of the pain of seeing that sticker when you get in there in year 2, year 3, and your costs continue. But you reap the rewards down the road. It's kind of like a marathon thing.
How about insurance? Like, what have you heard about insurance?
So insurance is a tough one on the mortgage side of things. It's a lot of times what I'm hearing a lot of with the insurance. The companies are going out to do the inspections after they purchase the property. And then there's problems with underwriting, what their premium is and what that is in terms of going up. The roofs are like huge around here.
Yeah.
I mean,
a lot of insurance companies are turning buyers away or literally like canceling policies because of the age of the roof, because the roof is 15 years old, 20 years old, which is ridiculous. But I think that the key thing here is that the insurance industry is under pressure. Like, not under pressure. They're because of all the storms that we've had and all the insurance claims that they've had to pay out. They're making it harder for someone to get insurance on their house.
Yeah.
And the average roof lasts 25 to 35 years. Right. So if they're not insuring a property that has a roof that's an age of, that's a 15-year-old roof on it, we have a problem.
Yeah.
And it's something that needs to be addressed in Congress.
Yeah.
Right. At a federal level. And we have to make sure that properties are being insured. There's got to be a better way. At the same time, I'm going to say it. These insurance companies are making millions of dollars.
A lot of money.
Millions of dollars, and they're jacking up our premiums, and the average person never uses their insurance policy.
Yeah, or they're afraid to.
Or they're afraid to, right?
I mean, going through whether it's your car or your home, recreational vehicles, whatever it might be. It is, every time you always think if you use it, it's going to get you in the long run of you're going to pay that back tenfold.
Right.
To have that happen. That's where and we're not seeing it now, but I do see on the roofs, especially in our area here in the Valley, in Jersey, the tri-state area, we had those hailstorms a number of years ago. But I'm seeing it more and more and I feel it will be as we turn a little bit and shift a little bit more into the buyers having a little bit of a better hand in the market, possibly sellers with the age of the roofs, having all the equity, maybe negotiating escrow holdbacks or roof replacements or something with the roof to help with those insurance costs. Because after that, to our earlier and our former on the beginning of the whole cast today on the cost of homeownership, that could be a $600 a year swing easy with the roof, just the roof, or getting insurance, like you said.
Right. And how much does that roof cost to replace right now?
Yeah.
Right. I mean, before I got into real estate, that's what I did.
Yeah.
I was in construction. I did roofing. I did siding. I did things like that. And I was 20 some years ago.
Yeah.
But now what it costs to replace an average roof on a 2-story colonial is like $30,000. for something that it's just,
Yeah.
20 years ago, 25 years ago, that same roof was like 8 grand. So, that just goes to show how much it costs. And so that could have something to do with the insurance premiums going up and how much, the maintenance and repairs for this stuff is, and the insurance companies calculating that into into their mix. But
Has there been talk too, though, like, and I know a lot of times it's national companies, like your State Farm, your Allstates. I know they do this with flood insurance, but we make more like regional, like for everything. Like if you're, and they do that to a degree, I know, like PA is different than Florida versus, but make it even more regional to, I don't know. I'm glad you're working on stuff like this with the association and in DC and at the local level, because it's a barrier to a lot of home ownership in the beginning, where they need to drastically figure something out with that and the taxes as well.
yeah, we actually have a committee at NAR. It's called the Insurance Committee, and these are all the problems that they talk about. Is everything about insurance, flood insurance. You just mentioned flood insurance. There's always a fight. Almost, it seems like every single year or every other year to extend the national flood insurance programs, to fund it, basically.
Yeah.
Just because we're always looking short term.
Yeah.
Instead of long term,
Yeah.
and we should have a long term fix for a lot of these things. I would love to see insurance premiums capped regionally, like you mentioned.
Yeah.
That'd
be great.
Florida, the southeast, basically. Where we're getting all these hurricanes and stuff. I mean, somebody in the Northeast up here shouldn't have to pay as much money for insurance premiums as someone who lives in an area where storms come through, in Oklahoma, where you get a lot of tornadoes, or Southern California, where you get earthquakes and stuff like that.
Absolutely.
Like, it should be regionalized. I mean,
Yes.
you could also say, though, the Northeast gets a lot of snowstorms, so there's a lot of weight on roofs and stuff like that.
Yes.
But it would work if there was
Yeah.
a regional thing.
Absolutely. And that makes sense. I mean, it's all those make sense decisions that I think a lot of things have gotten away from because of the bigger companies and the bigger profits and everything that goes along with it. But it's, it's whether it's finding the right house, or now I know who to call if I need to replace a roof. I'll give you a call.
No, I don't get up on a roof
Okay.
anymore.
All right. So, but I think that was a great article for this week to kind of go through about those costs. And I think the takeaway, the recap on the whole thing for this week, in my mind, is yes, the costs are rising. I didn't expect it's about, let's just say about $6,000 to $8,000 a year. But when you look at the math, and that's why I love doing mortgages on my side of things, is that, and you love getting everyone into the homes, is it's still the best long-term financial decision you can make for your longevity, for yourself, for your family, and you said for your retirement.
Look at it like this. If you bought a home 2 years ago and you paid $500,000 for the home, what is that home worth today?
Yeah.
It might have cost you $16,000 a year to own that home,
Sure.
right? With maintenance costs and insurance and all the whole 9 yards. But
Yeah.
what is that home that you bought 2 years ago for $500,000? What is it worth today?
Yep.
Right? It's worth like
I was
6.25.
saying north of 6.
So that's the key takeaway. Like,
Yes.
no matter how much it costs to own a home, it's always a very smart investment.
Absolutely. For yourself, for your future. So great talk today.
Yeah.
That was perfect. That article was fantastic timing. It was right when we were coming out. So, anything you guys might have any questions on, it's a guy to call. No roofs, real estate wise, though. Give Sean a call. And thank you so much again for all your insight, and especially from what you're dealing with there in NAR, and keep the fight going. We all appreciate it very much.
You bet.
All right. Thanks. See you guys.